research just out of the air. Case number 3, I never lived, so how could I die? And in case number 4, we're going to learn how to make pasta. So that's going to be really fun and exciting. And then we're going to have some fun learning, and I'll share with you some of my favorite movies, particularly in this area of fraud. Now, Hollywood is big on fraud, and I'll share some of that with you. And finally, we'll go back to responding to fraud. And I'll continue with the scenario that I'd created in the first webinar. And we'll continue from there. So I'll take you back. And hopefully at the end, we'll have time for 1 or 2 questions. So what have we learned so far? We all know now that fraud is pervasive. It affects every business, regardless of size or industry. You know, you are not spared from fraud. If you're out there and you're sitting on assets, you're sitting on cash, then fraud will find you. The schemes are often very brash. They're not complicated. They're pretty simple. Sometimes it's literally just grab the money and run. So it's not that difficult to detect it when it happens. But in spite of that, frauds go on for really long times, and the losses are sometimes staggering, not just financial losses, but losses in terms of reputation damage, losses in terms of business loss. And sometimes the losses are so catastrophic that businesses often don't recover from them. And also, we learned that the losses aren't recovered. So, you know, the chances, once your assets left your premises, the chance that you're going to get it back is very, very low. So what you don't know can hurt you. So if you haven't found fraud in your organization and you're not doing the right things, you do need to be worried, because you may not have found fraud. Doesn't mean it's not there. You know, it is there. You just have to find it. Who's involved? Everyone. Employees, especially from these departments, accounting, operations, sales, and then executives and upper management, right up to the board of directors, CEO, some of the biggest frauds coming from that group, customer service, purchasing, finance, and then third parties, your customers, your third-party agents, suppliers, consultants, business partners, and organized crime gangs, you know, cybercrime, and also various combinations resulting from collusion by various people in the organization and outside the organization. We looked at how fraud happens and the psychology of a fraudster. And this is really important. I keep bringing this slide back because this is the foundation for fighting fraud. If you don't understand this, and if you skip over this, a lot of the frauds are going to stare you in the face and you just won't realize. So let's go back very quickly. And fraud experts love figures. There's a fraud triangle, there's a fraud diamond, fraud pentagon, fraud hexagon. We're waiting for somebody to come up with a fraud septagon. Fraud triangle, the 3 key factors was the pressure or the need for the fraudster to commit fraud. And it was money and any kind of pressure. And then the opportunity, which is basically the lack of controls, and the rationalization, the thought process whereby the fraudster feels, you know, he's doing something, he's committing fraud, but he somehow internally justifies it to himself. And then came along the fraud diamond theory, which added capability. The fraudster's got to be able to have the ability to commit the fraud, not just wants to do it, but he has the expertise. He understands how he can circumvent controls and basically get away with fraud for a long time. Because remember, fraud is hidden. Yeah, it's concealed. And in the Pentagon, the 5th dimension was arrogance. So fraudsters feel invincible. They feel they're invincible. They feel like, you know, they're smarter than the rest of us. And particularly once the fraud started and they've realized, hey, nobody noticed, you know, I've got away with this. I've got money in my pocket and I can do this over and over again. And they then think they're invincible. And that's the arrogance side. And lastly, in the hexagon, there was one more dimension, which was character. And character comes from, you know, your upbringing, your social environment, the things that have happened to you in life, your norms, your values. And it's pretty important because, as we'll see, a lot of people have turned to fraud in their life, and something happened, you know, that tipped them over the edge. And these are the people we want to keep out. So we also looked at the potential fraud environment. And these are some of the things which result in more fraud. Too much trust placed in people, knowledge of the organizational weaknesses. We saw that people with more experience, longer duration of tenure in work, they were able to commit much larger frauds because of their knowledge of the weaknesses, the knowledge of the accounting system weaknesses. We also notice complacency by those who are in charge. So when there's less oversight, when people in charge aren't doing their jobs and there's just too much trust, that also has resulted in extra fraud. Inappropriate examples set by those running the organization, the tone at the top, the culture, fraud not being dealt with properly. You don't have zero tolerance for fraud, and that sets the tone. And then audit trail and password level controls in accounting systems being circumvented, and expectations not communicated clearly to all stakeholders. In the last webinar, we had this little game, and for those of you who were there, just going through the key lessons, a lot of people were typing furiously, and it was really good to get the insights, when people were made to wear these roles, what is it that they were going to do? And just going back to that and taking some of the key lessons from that. So what were the roles that some people, remember, became the dishonest bosses, and they had pressure, financial pressure, they had personal pressure or regulatory pressure, or they were being beaten by the competition. And in addition to all that, they had a low moral compass. And what we found there was, these are the individuals that can result in the largest frauds with the longest duration. And they're committed by the most senior employees, by the people we trust the most, by owners, by executives, by the board. Also, we found that they're the people who are let off the most easily. They had shorter sentences, a lot of them weren't fired, there was no cases, legal cases against them, and so on and so forth, particularly compared with managers and employees. The second role that people played was the despot. Now, who's the despot? The despot is a ruler who exercises his rule in a very cruel and oppressive way. So basically, he's cruel and oppressive to his subjects. And we have a lot of despots, in work environment. You get people, who are extremely oppressive, maybe work hours, maybe not equal pay, oppressive in just the way they treat their employees, and so on and so forth. So a lot of people had some really interesting answers here as well. And what we found was that it creates, first of all, a very negative environment. And with that negative environment, you're increasing the risk of fraud significantly. So I always ask this question, are you in the business of manufacturing steel, for example? Yes, that's your core business. But if you're not doing things properly, you could be manufacturing steel, and you could also be manufacturing fraudsters. The next role was the role of the time bomb. And this is the person, who was right at the edge, about to explode. And what we asked the participants to do was to talk about the triggers. What were the triggers that pushed them over the edge? And what we found was, all sorts of triggers. You can have financial triggers, you could have work triggers, you could have triggers that are personal in nature, spouse, divorce, children's fees. It could be anything, or just basically, you've got some bad habits, gambling, drinking. It could be anything. So the lesson there was, we have to look out for the triggers that might turn your staff, your situational staff, your potential staff into actual fraudsters. And you've got to help them where you can, because this is the majority of us. The exploited. This is the last role. When staff feel or rationalize that they've been wronged, some of them will find ways to hit back or even get even. And we saw this. We had some pretty interesting comments, but we also had quite a lot of comments which, by the way, were illegal. A lot of people said, hey, I'm going to sabotage plant and machinery. I mean, yeah, you're committing fraud, and that itself is illegal. But a lot of other suggestions were just as illegal, if not more illegal. So guys, a word of warning, be careful. If you don't like your employer, just leave, look for a better employer, but don't start sabotaging plant and machinery. Don't start stealing their intellectual property. One person I think said, we're going to go to, just sell all the secrets to the competition. Yeah, all of that is illegal stuff. And obviously you could get into a lot of trouble for that. We looked at people in fraud, and these are the three categories of people. You've got people who are dishonest, you have people who will always be honest, and you've got the situationally honest people or situationally dishonest people. And what were the lessons for us? And that is 72 to 85% of all people, will waver somewhere in between, right? So the key lesson was seek and retain the honest, which means you've got to know the people, ask for background, ask for references, talk to people about them, ask about their honesty, ask about their reliability, and these are the people you want to hire. The other guys, the guys in the red, the dishonest people, those ones you want to just keep out. So you have to do your background checks. You've got to be asking far and wide, particularly when you employ in positions of high fraud risk. We all know what these are now, senior positions which are very close to cash, which are very close to assets, positions with decision-making responsibilities. You got to be extra honest people who've just fallen off the edge. Those guys are going to get you. If they get into your organization, that's it. It's just a matter of time. They're going to start bleeding you. And then we realized that we've got to actively manage the rest. And we're going to spend a lot more time talking about that 72 to 85% where we can actually do something. Quickly going through the report to the nation's highlights. This is a report that's done once every 2 years by the Association of Certified Fraud Examiners. It's the largest report of its kind, and it's got extremely valuable insights. The contributions are made by people like myself, certified fraud examiners, from cases that they've investigated. So it's based not on perception. This is based on real cases that were investigated, where there was a result, and all of these findings are shared with us. So everything in this report is very real. It's not perception. The three main kinds of frauds that were looked at were asset misappropriation, which is simply theft of assets, or corruption, or financial statement fraud. And the latter, financial statement fraud, is manipulating the financial statements either to show a better position or a worse position. And what we saw was most fraud cases, 86% of them involved the first category, asset misappropriation, theft of assets, and the median loss was 100,000. 50% of the cases involved corruption. It was either bribery, kickbacks, extortion. That's 150,000. And 9% of the cases involved financial statement fraud. So a small percentage of cases. However, when it did happen, the median loss was $593,000. So very, very large. You want to try and avoid all of these three, obviously. This, for me, is a very important slide because this is the routes that the fraudsters take. This is the fraud taxonomy. It's the type of frauds. We got to know how the fraudster thinks. What are the ways that he can hit our organization? And today we're going to go through some of this. And in my next webinar, we're going to look at about 40 of these and how we can detect them and stop them. So you don't want to miss the next webinar. The global cost of fraud. 2,110 cases were covered in this last report from 133 countries, and they cost the companies 3.6 billion. So we're not looking at small numbers here. The average loss per case was $1.8 million, though the median loss was lower. And CFEs estimated that 5% of all revenue is lost to fraud every year. We went through the medians in the various countries or various regions all over the world. And you can see in our area, actually, the medians are quite lower. Sub-Saharan Africa at the 75th percentile, the median is 352,000, compared with when you look at Eastern Europe, which had a much higher median at the 75th percentile, $1.125 million per case loss. So we're not looking at some small numbers here. I mean, the numbers are quite large, quite staggering when they do happen. detection, we learned that 42% of all frauds were detected by tips, which is nearly 3 times as many cases as the most common fraud. And more than half of those tips came from employees. So what's the lesson? You've got to facilitate tips coming through your organization, and you've got to make your employees aware that they're responsible. They have an obligation to report any tips that they come across. A lot of times, when we discover fraud, after it's all over and the wind's blown and the dust is settled, you'll find, a lot of people will say, hey, we knew about this, this was common knowledge. But well, it's not common knowledge if it's not brought to the attention of the people that can do something about it. The other thing we learned was that email and web-based reporting, both of them surpassed telephone hotlines over the last 4 years. So this is really interesting. For the longest period, telephone hotlines were the best methods for reporting frauds. But now more and more people are reporting fraud through email and through web-based mediums. So you want to make sure that your organization is using both emails as well as the internet to solicit tips from anyone, employees as well as third parties. We also found that organizations with hotlines, any sort of hotline, had lower frauds. So with hotlines, the median was 100,000 and the fraud duration was 12 months. Without hotlines, the median was double, 200,000, and the duration was 1.5 times as long, 18 months. But remember, this is just the median. Some of the frauds went on for 5, 6, 7 years and even longer. Corruption was the most common scheme in every global region. And we also looked at this concept of fraud velocity. How much do organizations roughly lose per month? And what we found was that figure was $8,300. So those of you who haven't found fraud, this is not good news. It could be good news if you're doing everything right, if you've done everything, and if you score 100%, in our fraud prevention poll, which is coming up in a few minutes, then you've got something to laugh. You've got something you can congratulate yourself on the back. But if you're not doing a lot of what we're suggesting and you haven't found fraud, then money is seeping through your organization, but you're simply not aware of it. We also looked at cryptocurrency, and 8% of fraud cases involved the use of cryptocurrency. In 48% of the cases, cryptocurrency was used for bribery and kickback payments. And in 43% of the cases, it was used to convert misappropriated assets. So they were converted into cryptocurrency. We also looked at industry losses by various industries. And we know the median loss was a lot lower. It was only 100,000. But when you look at industries, you can see in real estate, the median loss was a lot higher, 435,000. Wholesale trade, also high. Transport and warehousing, construction, utilities, all of these had much higher losses than the average in the industry. And we also found that organizations with fewest employees had highest median loss, which was 150,000. The next thing we looked at was perpetrators. And again, this is common news now. Owners, executives committed the largest frauds. Their median loss was 335,000 compared with employees, where the median loss was 6 times lower, even more than that. And nearly half of these occupational frauds came from operations department, accounting department, top-level management, and sales department. 85% of fraudsters had displayed behavioral red flags of fraud. Now, what does this mean? This is because for 1 year, that's the median duration of a fraud, the fraudsters displaying behavior that can alert you, but nobody in the organization picks it. Not the guys, who can alert people, not management, no one, not the internal auditor, not the external, nobody picks it up. And that's why you've got a median duration of 12 months. For 12 months at least, these frauds are not picked up, even though 85% of cases had the warning signs. So there you go. Lots of scope to actually reduce fraud when you look at it from that angle. Only 6% of perpetrators had a prior fraud conviction. Now, what this tells me is that a lot of the frauds happen because we're not dealing with that 75% to 85%, the situationally honest or situationally dishonest people. We're not dealing with them properly. We're giving them either opportunities to commit fraud, or we're pushing them to the edge, or maybe their own environment is pushing them to the edge, and we're not helping, to keep them on the, on the path where we want them to be. So that's what that tells me. The presence of anti-fraud controls is associated with low frauds and quicker fraud detection. Half of the fraud cases occur due to lack of internal controls or overriding existing controls. And 81% of victim organizations modified their controls after the fraud. Case results. This is what happened once the fraud had been investigated and the perpetrator had been found. We found that 61% of the perpetrators were terminated by their employees. 58% of cases were referred to law enforcement. 66% of cases were referred to law enforcement, and they resulted in a conviction. So that's not a bad rate. And 50% of the people who didn't refer to their cases to the law, they cited internal discipline as the main reason. They said, well, we had internal discipline and that was enough. We didn't want to take the matter to the courts. We've looked at a number of ways that employee fraud happened. The theft of cash receipts, under the table payments, bribes or kickbacks, theft of incoming checks, check tampering through forged signatures, altered dates and amounts, payment to fictitious employees, creating and paying fictitious suppliers, creating inflated or phony expense vouchers, theft of inventory, supplies, falsifying receivables and stealing the payments, altering account records to hide the theft of frauds, either by altering the records or by destroying them altogether. These are some of the main ones. I've summarized here the key lessons in detail, but I'm not going to go through this because it's going to take another 10 minutes. But I've got 2 slides. We had about 70, 80 slides just to cover this, but it's there. Please go back to it and you can go through it in your own time. Right, coming back to the bigger picture now, fraud risk management. The 3 pillars upon which this stands, which is prevention, detection, and response. And we've gone through all of those to a certain extent, but now we're going to start delving a little bit deeper. And you can see here, it starts off with the anti-fraud culture, the tone at the top, the people, the board of directors, they're responsible. They have the oversight for governance. They have the oversight for setting the correct tone, for making things right. They're the people, who set the climate. They're the ones, who have the goalposts. So that's the culture. And then governance. What are the checks and balances? And when it comes to detection, fraud risk assessment, conducting these assessments every year, modifying them every year, knowing which areas have the highest fraud risk, and ensuring that particularly in those areas, we are scoring, A+. We're not scoring C and D in those areas. Anti-fraud procedures, what do you do once you've detected the fraud? And then fraud investigation, the investigation itself. And we're going to look at all of these areas today. So what I want to do now is get your keypads ready, because you're all going to participate. I'm going to be launching the fraud prevention checkup in a second, and I want to just take you through this very quickly. So first of all, why are we doing this? We're doing this because it's obviously better for you to proactively identify the key fraud risks, and this can save your business from disaster. It can also save you money, because we've seen how much money goes through fraud. But not just that, if your competitors are doing this and they're saving that 5%, which is being taken off, from revenue, from the top line. So it's 5% off the top line, not 5% of profit. If your competitors are doing this, they've got a huge monetary advantage. They're going to be able to undercut you in terms of pricing. They're going to be able to undercut you in terms of a lot of other streamlining. We've just been through 2 years of, very difficult economic climate. The people who are going to survive are the ones who were able to save that 5%. So yeah, this is a big opportunity. It's all pervasive. It can't be ignored. It's the least expensive way to finding fraud, vulnerability in your organization. Every other way is a lot more expensive. It's also a good way to establish a relationship with a certified fraud examiner in your area, in your industry. So look out for these guys, look out for the experts and engage them, because they can actually help reduce the fraud risk. They can help bring down the fraud losses in a big way. And obviously, lastly, it helps investor, regulator, and shareholder confidence, because once these people know that your accounts are reliable, you're going to attract capital and you're going to retain capital. So there are 9 questions in the poll. What I want you to do is don't rush through the answers. I'm going to be talking you through each one. So wait for me. We'll read the question together. I'll give you a little bit more information about how to score the question, because it may not be apparent. So wait until I've explained each question and then score. And it's very simple. So I'm going to describe a process, and you're going to have 4 options for all 9 questions. And either the process is not implemented in your organization, so it's simply not there, or it's there, it's a little bit different, and so you can say it's partially implemented. Or it's there, it's implemented, but you haven't tested it in the past year. So that's the third alternative. Or you've hit the bullseye, it's implemented, it's tested in the year, and it's found to be effective. So that's the maximum. So your last choice is going to be your best choice if you've done everything and you've tested it in the year and you found it's effective. When I end the poll, I'm going to go back through each question and we'll look at the results and I'll explain what this means. Now, unfortunately, Zoom or other survey systems, software, don't do what we really want to do. So what we'll do is, after the survey, we'll have all of your results, we'll have all of your answers. We're going to summarize those by industry as best as we can. In some cases, we'll be able to identify the organization's industry. In others, we may not. So, we'll try and do the best we can. And then we'll share the results of that with all the participants on a no-name basis. And we'll try and score it for you as well. So we'll then give some points to these answers that you're giving. We'll add some points. So you'll get a numerical value of your organization versus the industry. And I think that's going to be really, really useful. You can take that back to your boards. You can take that back to management and say, guys, look, this is a roadmap. Yeah, it may not be 100% accurate because maybe there's just a few of you here. So, it's something, it's an exercise you can repeat in your organization, and it gives you a blueprint from which you can move. So yeah, very valuable. Right. So let me now go and launch the poll. Okay, Moses, if you can hear me, just shout out. I mean, is this visible to everybody now?
Yes.
Otherwise, I'm going to be doing a poll and nobody is going to be able to see what we're talking about.
It is visible.
Is it visible?
Yes.
Okay, excellent. Thanks, Moses. Thanks for that feedback. Right. So here we go. Still visible, Moses?
Yes, it is, Zahir.
Excellent. All right, guys. So question number 1, fraud risk oversight. To what extent has the organization established a process for oversight of fraud risks by the board of directors or others charged with governance? For example, an audit committee. Now, like I said, I'm going to read the question and then I'm going to explain what this means so we all get comparable answers. Otherwise, some of us are obviously very optimistic, others will be pessimistic, so let's try and balance it as best as we can. Right. So we know that the board of directors is the governing body for every organization. The buck stops with them. They're the ones that are supposed to control fraud risk at the very highest level. So my question is this part of their mandate? When they are hired, do they get a document, that tells them, right, you guys are responsible for fraud risks. And not just that, you are responsible to make sure that it's happening. You get feedback on fraud risks. You make sure that there's a fraud risk assessment. If there isn't one, you question people. So that's the full understanding of this particular question. Now, if that's happening and it's working 100% and you've tested this, so for example, there's documentation and it was found to be effective, then you score yourself right at the bottom. Right, guys? You can start hitting the buttons now. Yeah. Some people, you won't have that at all. I mean, if your board of directors, for example, don't know that they are responsible for fraud risks, guys, you got to press the first answer. I'd like a little bit more participation. So before I go to the next question. Right, guys. Come on, guys. We've got not many people participating at the moment. So I'd like more participation because then this gets interesting. Moses, how many people do we have on the webinar at the moment? $538, right. So I've only got 9 people who are participating. Can we have more, please? Yeah, this is anonymous. None of this is going to go out. When you get feedback, it's going to be on a no-name basis. Okay, so this is good for your organizations. This is really good feedback for yourselves. Can we please have more people participating? I want everybody to participate, or nearly everybody to participate. We've got to have at least 50%, guys. Come on.
Zahir, just a moment. I realize that some of our participants are typing the numbers in the chat section, but the poll has a drop down that you can use to pick out the number of choice.
Right, okay. Yeah, so are they able to click on each one of these 4 answers?
Yeah, they should be able to.
Okay, well, I know 18 people have done it, so well, the numbers are going up. Moses, look at the chat section and just tell me whether anybody wants me to repeat this question, or can I move to the next question?
A number of people are attempting. I see some who are struggling to respond. They say they can't see the poll, but it should have popped up on your screen. For the participants, the poll should have popped up on your screen.
Right, okay.
And unless you have
the numbers are going up. I can see there's 32 people now, so maybe it's just a question of
maybe a few more seconds.
Yeah, certainly. Okay, I'll repeat the first question, guys, for those who weren't there. Perhaps they were doing something else, but listening to the thing, and now they've actually got to get their fingers working. Yeah, so they might have been multitasking. Right, so guys, you got to be here now. So the first question was fraud risk oversight. Does the board of directors or the audit committee know, and it's written in their mandate that they are responsible for fraud, and do they actually do something about it? Do they ask people, to identify fraud risks? Do they then make sure that a fraud risk assessment is done, and so on and so forth? The whole thing that you saw on the previous slide. Do they actually do that? That's what you got to say. If they do, and they're doing everything, give yourselves a answer. Your answer is the one at the bottom there, fully implemented and tested. If they're not doing any of this, they don't even know this is part of their mandate, then you got to give them the first answer, not implemented. And it's really as simple as that. All right, guys, shall I move on? Okay, the next one, fraud risk ownership. To what extent has the organization created ownership of fraud risks by identifying a senior member of management as having responsibility for managing all fraud risks within the organization? So here, you've got somebody senior at top management level, and he's ultimately responsible for managing all fraud risks. This is a large part of his job description. Yeah, he's actually hired, and this is one of the key things that he does. And so he's basically driving, he's reporting to the board, he's reporting to the audit committee, but he's driving the fraud risk prevention in the organization. So if you've got somebody like that, who's got a specifically this particular responsibility, and he's done a report this year, he's presented something to management or to the board and told them, look guys, this is what we're doing, this is how effective this is. You can start scoring them at the bottom, otherwise at the top or somewhere in between. I'm going to move a little bit quickly now. So if you've just started, please just try and catch up. Fraud risk assessment. To what extent has the organization implemented an ongoing process for regular identification of significant fraud risks to which it is exposed? So have you had a fraud risk assessment in your organization this year? That's the question. Yes, then you can score yourselves somewhere at the bottom, but choose the last one only if you've done this and you've tested it and you've found that the fraud risk assessment was effective. Basically, you have minimized your fraud risk. So that's where you score yourself. Otherwise, any one of the above. I'm moving on to the next one. Fraud risk tolerance and risk management policy. To what extent has the organization identified and had approved by the board of directors its tolerance for different types of fraud risks, a policy on how it will manage its fraud risks? So what we're talking about here is you've done the fraud risk assessment and now you've identified your high fraud risk areas. So how do you want to deal with them? You've got a number of choices. You can say, well, we are going to deal with this ourselves. We'll have additional controls. We're going to segregate responsibilities. We're going to have more oversight here. We're going to have exception reporting. You're dealing with that high fraud risk area. Or you could say, well, actually, we don't want to be in this area. This space is too risky for us. We're going to outsource this. So for example, you don't want to transport your cash from your premises to the bank. You might say, okay, let's outsource this. We don't want to risk losing a couple of million shillings anytime during the year. Right. My colleague is telling me those who can't see the poll will have to rejoin using Zoom on browser or update their Zoom desktop application. Okay, so you got one or two choices, guys. For those who can't see it, you can either rejoin using Zoom on your browser, Internet Explorer, Chrome, whatever you're using. Yeah. Or if you don't want to do that and basically you're happy to just listen, then just hang on in there. Don't leave. Okay. And we can just continue as is. Thanks, Steve. Right. So one option is you deal with the high risk area yourself. The second option is you can outsource it. The third option is you might say, well, we're going to outsource maybe a little bit, or we're going to deal with it, but we're also going to insure it. So you make sure that all your high risk areas have adequate insurance against all sorts of fraud risk. So those are the areas. So do you have this policy? Do you do a fraud risk management and that identifies all your high fraud risk areas? And then do you make a conscious decision about how you're going to deal with each one of these? If you're doing everything, you did it this year, you tested it this year, you found it to be effective, guys, hit the bottom one. Otherwise, any of the top three. Let's move on. Process level anti-fraud controls, re-engineering. To what extent has the organization implemented measures to eliminate or reduce through process engineering, re-engineering, each of the significant fraud risks identified in its risk assessment? So this question now is direct. You did a fraud risk. You've identified the high fraud risk areas and the high fraud risk controls specifically. Now, what did you do? So you know in this area, you've got a bit more risk. What did you do? Did you change the fraud? Did you layer a few more controls on top of it? Did you change the system? Did you do something about it? If you did something about it, you did a fraud risk assessment and you did something about those areas where you think there's a little bit more fraud risk that you're comfortable with, score yourselves at the bottom. Otherwise, one of the top three. I hope we're all keeping up. I can't see hands. So Moses, if anybody's putting their hand up, if they want me to slow down, you're going to have to intervene, Moses.
Okay, I can't seem to see the poll though on my end. You might need to.
Oh, yeah. Okay, well, we've still got people who are answering questions. We've got 88, 89 people now. So more people are joining us all the time and answering questions. So yeah, maybe you want to quickly log out and log in again. I can't end the poll because I've already started it, you know, otherwise the result's going to be, so I have to go through right to the end. But there's more people joining us all the time. The number's now at 91. So yeah, definitely more people somehow are accessing this and they're participating as well. 16% of everybody is participating at the moment. So the number is going up. I think initially we started with about 1% or 2%. So that number is rising all the time. And I'm going a little bit slow so you can catch up and you can answer those questions as accurately as possible. There's still 4 questions to go, including number 6. So I'll just delay it a little bit. Okay, we may overrun because of this, but I think this is such an important exercise. It's going to have so much benefit for everybody. You know, this is really worth slowing down for and just making sure that we've got as many people on board as we can. So guys, please bear with me. We may run over a little bit, but please bear with me. Yeah, we've still got a whole hour to go. So I think we're probably doing okay for time, actually. We can take time on this. So yeah, I can slow down, not an issue. So the 6th question was, have we changed our controls in the year where there was high fraud risk? Did we add additional controls on top of them? Did we introduce a higher level of segregation? Did we have more oversight? Did we change systems? Did we do something about it to counter the risk? We found that there was risk and then we countered it. So if you did that, you can click the bottom one. Otherwise, it's one of the top 3. I'm going to slowly move on to number 7. Environment level anti-fraud controls. To what extent has the organization implemented a code of conduct for employees at all levels and training for personnel upon hiring and regularly thereafter, and adequate communication to enable them to seek advice? So let me explain this. Most organizations will have a code of conduct. Yes, that's easy. You know, get one from the internet, modify it for your own circumstances, get everybody to do a sign off. That's easy. But that is not what we're talking about. That's literally 20% of it. Yeah. The trick is to embed that conduct in your employees. They've got to understand what it means. That's the trick. And not many people do that successfully. So the question we're asking here is, number 1, has everybody not just signed off on the code of conduct, but do they really understand what it means? And from a perspective of fighting fraud, are they going to do what is required of them? So if somebody, for example, suspects there's a fraud, is he going to behave appropriately? Is everybody going to make decisions in an ethical manner? Is the training appropriate? So, for example, in procurement, the training is going to be different when you're dealing with fraud, because procurement people can be enticed with bribes. Yeah, so bribery, bid rigging, this all happens in procurement. So they would need different sort of training compared to people, for example, in sales, because their training has to do with, anti-bribery, what are the consequences, bid rigging, how to avoid that, how severe are some of the penalties, and so on and so forth. Also, how quickly can you catch them? So, and we're gonna look at people, in our next webinar, we're going to specifically look at how to catch people, who are in the procurement department, in supplies, in purchasing. So if you can answer positive to all of that, then basically click on the last button. Otherwise, any of the top three. I'm going to move on. 2 more questions left only. And then we'll try and end the poll once we've got enough numbers. Number 8, environment level anti-fraud controls. To what extent has the organization implemented a process for promptly investigating reported matters, monitoring and compliance, regular measurement and incorporation of fraud prevention goals into controls, okay, into their systems? So let's break this down. It's a big question. It's a loaded question. On the first part, is it clear to everybody what happens once there's an allegation of fraud? Is that clearly spelled out? Does everybody in the organization understands if there's an allegation, if there's any suspicion, what they need to do? Also, do they understand what's going to happen once the matter's been reported? So do they know that your organization is going to do 1, 2, 3 from the moment a matter is reported as an allegation or a suspicion of fraud? What is the sequence of events after that? Does everybody understand this? Is it in writing? Is it communicated to everybody? Do people get training on this? Is everybody aware of their responsibility in this matter? Monitoring and compliance. Are you regularly monitoring your high risk areas, and is that incorporated in fraud prevention goals? So for example, your line management, in procurement, in sales, in inventory, stores, is it one of their goals that they've got to make sure there's no fraud in their department? And if there is fraud, what is going to be the consequence for them? And how is this going to be dealt with? Not necessarily that they're going to be fired, but how is that going to affect the entire department? What sort of additional controls, additional oversight might they be subjected to? So are they aware of all of this? So as you can see, quite a lot in there. If you're doing all of that and you've tested it as well in the year and it's found to be effective, score yourselves at the bottom. If not, any one of the top 3. Right, guys, we're nearly there. I'm glad to see the numbers gone up to 120. It's not ideal. I would have really liked at least 50% of the participants to be participating, but we're nearly at 25%. So yeah. Last question, guys. Proactive fraud detection. To what extent has the organization established a process to detect, investigate, and potentially resolve significant fraud? Such a process should typically include proactive fraud detection tests. So this is now talking about what are you doing to proactively detect fraud? You're not waiting for your auditors to find it. Do you have a robust internal audit program? That's probably the first part of this. But more than that, do you have surprise audits, surprise checks in your high risk areas? Are you actively sending people on leave in high risk areas? Do you have staff turnover in those high risk areas? Are you changing responsibility? Are you turning job rotation? Is that happening in your high risk areas? Do your systems look at patterns, trends? You know that you're going to have certain, what your reporting should look like. You know what your transactions should look like. Does your system report if something is outside of the ordinary? So are you doing that? Have you tweaked your system? Have you upgraded your system to be able to do that, to alert you proactively? So if you're doing all of those things and more, click on the bottom. Otherwise, one of the top three. Wow, the numbers started shooting up. What's happening, Moses?
Finally, everyone has found a solution. Majority, at least, found it.
All right, okay. Well, I'm going to sit back for a little while and I'm going to drink some water.
Right. So for those struggling, you simply need to use the web. And when you use the web, there's a point where you have 3 dots. You use those and you can see the polls at that point.
Whilst we're doing this, maybe I can just talk a little bit about why I chose to be in this particular field. A lot of people ask me this question, and it was a question which came up, I think, in the previous web. So maybe I can answer it now, and then we can save time at the end for questions and answers. So, right. So why fraud investigation or fraud prevention? First of all, it's something that's pretty close to my heart. I started off as an auditor, and I thoroughly enjoyed, doing statutory audits for banks, for all sorts of organizations. It was fantastic, excellent learning experience. It really made me a better accountant. But then at some point, I decided, right, I want to be able to do a little bit more and work in an area where there's, I wouldn't say more challenge, but I guess higher risk. I'm sort of, high risk attracts me. So that's when I started the first forensic practice in East Africa in the year 2000, and also started doing my papers for ACFE, for Certified Fraud Examination. And I set up a team. And it's been a very interesting journey. I don't regret it for a moment. I think also there's a huge need for this, because you're on the right side. You've got fraud is obviously a huge business at the moment. It is. I mean, you've got what possibly 0 to 5% of working population. The people who are in jobs that have turned to a life of fraud. There's a dark web, and in the dark web, this is how we should commit fraud. I mean, imagine, people are saying, right, guys, I did this really well. You guys can learn from it and go ahead, and try this particular fraud everywhere. So guys, I'm not giving you tips on how to commit extra fraud here, but I'm just saying it's become such a huge problem, that it's almost like, there are people out there, who are very proud that they've done this, they've got away, and they're actively recruiting other people. So yeah, it's time that all of us bolster efforts and try and prevent that lot. Also, if you can stop people from falling on the dark side, then you've saved the entire organization as well as the individuals as well from a lot of trouble, because for anybody who's been through a fraud investigation and has dealt with the negative outcome on the individuals who are involved. And I'm going to go through this in one of my stories. It's not nice. It's not nice for the individual. It's not nice for the family. It's not nice for the organization. There are just so many casualties in this area. In terms of scope, there's quite a lot. The whole line for forensics is quite an interesting line, and there's quite a lot to do, both from the proactive side, which is fraud prevention, to the reactive side. So in the proactive side, you've got fraud prevention, you've basically got looking at systems, training. There's so much that can be done, systems implementation, anti-fraud systems. There's loads of scope there. And then on the reactive side, you're looking at investigation. So whether it's a career as in the police or as a detective or in one of the advisory firms, there's lots of opportunity there. Also in terms of just careers in internal audit, lots of opportunity there as well. But also in terms of just legal, because a lot of the people in our team are not just accountants, but are also qualified lawyers. So we work very closely with lawyers because everything about fraud has the potential to end up in court. And it's quite interesting. You get to see the legal side as well. And there's also the human psychology side. So, if you're somebody that likes dealing with human psychology, working in this area is going to be quite interesting and exciting for you, because the human psyche, comes into play, and you can see why people turn to a life of crime. And you can also see, how there are so many ways to help these people not get there, and just to avoid them getting themselves into this mess. Right, guys. I think the poll has been going on for nearly half an hour now. I'd planned it for about 20 minutes, so we're sort of 10 minutes over time. Moses, I think what I'm going to do now is we're nearly at 40%. So I'm going to end the poll now. Guys, for those who haven't answered, I'm just going to count to 10. So please get your answers in quickly, and then I'm going to end the poll. So 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Right, guys. I was thinking hard there. I didn't want to miss a digit. Yeah, that would have been a real disaster. All right, guys, let's end the poll now, and let's see what we've got. We've got 237 people who've participated. Thank you so much, guys, for your time, and I'm ending the poll now. Okay, and now I'm going to share the results. So let's start going through the results. Here, for the first one, fraud risk oversight, 39% of people said that they'd fully implemented this, and that's good. But look at the top two answers: not implemented, 12%, 30% partially implemented. So what this tells me is there's a lot of organizations out there which at the very highest level, they haven't got oversight for fraud risk. And again, so this is a huge opportunity. You need to go back there. You need to have this discussion with your shareholders, with your board, with your audit committee, or with the family. If it's a family business, have this discussion with them, and get this structure in place. Let's look at the second one. So again, when you look at the bottom there, just over a third, nearly 40%, have fully implemented this. This is fraud risk ownership. So there's somebody in the organization that is specifically responsible for fraud risk. I suspect a lot of the regulated industries, for example, banking, insurance, funds, investment bankers. A lot of these guys will have ticked these boxes because it's a requirement. But in a lot of the other industries where it's not a requirement, you can see the numbers there at the top. So again, huge opportunity there. Get somebody to start wearing this hat, go and add this to somebody's responsibility job description and start the process. Number 3, fraud risk assessment. Right, the numbers start falling down now. So we've now gone from 39 to 38 to 33. Only 33%, just 1/3 of our participants had a fraud risk assessment in the year, which was tested and found to be effective. Look at the top 2 there. Not implemented, 18%, nearly 20%, partially implemented, 28%. So that's nearly 50% there, 46%. And then implemented but not tested. So again, huge scope for improvement, guys. Go there, get your fraud risk assessments done. And in the next webinar, this is of interest, guys. So everybody who's here who hasn't done this, in the next webinar, I'm going to look at 2 areas, critical areas. I asked this question in our last webinar, and people gave me some suggested areas, and I've chosen 2 of them, 2 of the highest risk areas, and I'm going to go through them, and we're actually going to look at fraud risk assessment in those 2 areas. That's going to be really exciting. So guys, yeah, anybody who hasn't done it, here's your opportunity to come and learn. Fraud risk tolerance and risk management policy. Again, the number at the bottom, 33, 34%, and the numbers at the top, you can see sort of leveling out. So get your policy in there, okay, and then deal with it. I mean, deal with each specific fraud risk area. Either you want to manage it yourself, or you can outsource it, or minimum, you need to have insurance to protect yourself, because you don't want to have a situation. I've just had, I think somebody's made an inquiry recently. They've had a loss of several 100 million shillings and they don't have a fidelity policy. So basically, if they can't recover that money, it's just lost. Yeah, and you don't want to be in that situation. Process level anti-fraud controls, re-engineering. We can see again the numbers dropping at the bottom and the numbers at the top going even higher. So yeah, again, what you need to do here is get somebody who's got expertise to come and look at your high fraud risk areas, to either add controls to them, otherwise to completely change the process itself so you've got better control, and you've got better reporting, and you've got a better line of sight in those areas. Environment level controls. You still got the 33% hanging in there at the bottom, but you got 67%, who have just done it partially. So yes, your opportunity to go there and implement this. Environment level controls, again, code of conduct, training, relevant training, communication. I think there's a little bit more here, 41% at the bottom. But again, room for improvement with a lot of people. So I think this definitely, you can see it's been a useful exercise. I would have been very surprised if I got 100% there at the bottom. So I think it's told me what is probably the reality out there. That a lot of this, for a lot of businesses, there's huge room for improvement in all these areas. Environment level control, again, promptly investigating matters, monitoring and compliance. You can see here 33%, but the numbers at the top fluctuating. And then finally, proactive detection. Again, I expected the 33% because I know this happens in all banking systems. They have reporting, and it happens in other, ERP systems as well, where they have exception reports. So yes, but a lot of room for improvement there as well. Excellent, guys. Thanks so much for sharing this. Like I said, at the end of this, we're going to get back. We've got our work cut out for us. So we're going to take what you've given us. We're going to go back. We're going to put numbers on these. We're then going to try and compare the industry sectors and try and send you reports by industry. And I'm hoping that those, you will find those hugely of huge benefit. Right, so I think we're back. Moses, are you there, Moses? And can you see my fraud risk management framework slide?
Yes, I can. Yes, I can.
Excellent. All right, so we're ready to go. Red flags. So now we looked at the first element, which was prevention, and we've had a good stab at it. Let's now have a stab on detection. So we talked about what red flags are. We go through it. A red flag is an unusual circumstance or a pattern of anomalies, and it should alert a reasonable person of possible misconduct. That's what this is. So that's what we're looking for. We're looking for an unusual circumstance or a pattern of something that doesn't seem right. We found 8 red flags. These are the most common. These red flags have been there since ACFE started in 1996 doing their surveys, and they've appeared every single time. And living beyond the means has been the most prevalent. And I think 40% of the cases, the top red flag was living beyond the means. And we also looked at the difference between men and women. And what we found was that when the perpetrator was a lady, they tended to display this behavior much sooner than the men. So these are the 8 behaviors: living beyond the means, financial difficulties. There's going to be an indication that the person, is going through some kind of financial difficulty. Also, unusually close association with vendors or customers, controlling issues, unwillingness to share duties, irritability, suspiciousness, or defensiveness, a wheeler-dealer attitude. And one of the movies we're going to look at had exactly this. The guy had just wheeler-dealer attitude. Some of you probably already know which movie I'm talking about. It's related to fraud. We'll talk about it in a few minutes. Bullying or intimidation, and divorce, family problems. Right, let's go a little bit deeper. So using red flags to detect fraud or misconduct at senior leadership level. These are some of the things you need to look out for. Autocratic management style. Not necessarily a bad thing, but if it's there to the detriment of people voicing their opinions, then you need to try and figure out why is this. Centralized authority as opposed to decision-making in a more shared way. Lack of a strategic long-term plan. So basically very short-term focus. Reporting by exception, not by norm. And then profit focused rather than customer focused. So basically a very strong drive for just profit rather than customers. An attitude to management by crisis. Financial statements being overly complex, and the failure to discipline individuals, or basically just double standards, not treating everybody in the same way. All of these could be red flags. And because we know that fraud at the very top, has the largest consequence. I mean, if these red flags are very prevalent and there's no reasonable explanation for it. The thing is, with all red flags, there can be a reasonable explanation, okay? And this might just be the way people do things. But if there isn't a reasonable explanation, then you got to look for why else is it happening? And that's the inquisitive mind that is required when you're asking these questions. Transactions. Does it make sense? The person who's recorded it, is that odd? I mean, should this person have recorded this particular transaction? Has there been an override of internal controls in recording this transaction? So somebody else was supposed to maybe sign a check, but somebody else has signed it. Why is that? If you see a different signature from the one that's used to, that should immediately alert you that things are not right. In line with company operations, goals, and objectives. So when you look at the transaction, does it follow what you're doing as a business? And then when you look at the bigger picture, when you compare it with the economy, the industry, your key competitors, and your other related accounting data, does that transaction make sense? Without talking names, some of our supermarkets failed recently, in the recent past. And one of the anomalies was simply the acquisition of a lot of property and expansion. And it didn't make sense, but it wasn't questioned, until the impact on cash reversible. So yeah, sometimes it's right there, it's blatant, but we don't see it. And if we do, nobody does anything about it. Proper approval and authority levels. So does the transaction have proper approval and authority levels? And is there anything else that's suspicious about the transaction? So those of you who are reviewing transactions, don't let your guard down. When something doesn't seem right, don't just brush it off. We've all got this innate sense that something's not right. You hold on to that, okay, and then start asking questions. And what you'll find is, in most cases, there's going to be a reasonable explanation, but sometimes you will stumble across fraud. And that's why don't just brush aside, that sixth sense in you. Data, unusual timing of transactions, the frequency of transactions, unusual amounts recorded, questionable parties involved. A lot of you who do data mining, and do proactive data analysis, these are the sort of things you're looking for. Documents. Are there missing documents? So you ask for a document and it's not brought to you straight away. You ask yourself the question, why? You're told, well, it's in storage or whatever, or it's been altered, or it seems in a pile of documents, a document seems newer than the rest of the documents. So anything that's out of the ordinary about that document, or it's very creased, or whatever. Evidence of backdating documents. No original document available. So you've asked for an original, but somebody hands you a copy. And it's a copy from a photocopying machine or something, yeah? Why? Documents that conflict with one another, or questionable or missing signatures on documents. All of these should start you asking questions. Controls. Lack of controls, pretty obvious. Known overrides, again, an obvious one. Unwillingness to remediate. Now, this is an interesting one. So there's a control. You've told the store's manager, guys, fix this. It doesn't get fixed. Now you've got to start asking the question, why? Is this, okay, the door through which things are moving out? Sometimes it's going to be pretty obvious. So when you get resistance to remediate controls, that's a red flag, big one. Poor tone at the top, particularly to implement controls. You've seen this so many times. You are trying to implement a system in an organization, it's not properly implemented, particularly ERP systems, where you've got lots of modules and you find it's impossible, for the integration to be done, and things are just not working, and eventually it's just given up. People actually make it impossible to implement this, and you see loads of examples in organizations, in government, of failed implementations of brilliant systems. And then you ask yourself the question, why did it fail? Red flag. Segregation of duties. Sometimes this is an excuse, particularly in family-owned businesses. Yeah, it is an excuse. Sometimes in larger businesses. And also, this is an interesting one, where you've got new businesses. And one of the case studies we're going to look at soon is exactly that. where you've got lack of segregation simply because you've launched a new division or a new product line, or you've gone into a new area, and therefore you've got to trust one or two individuals with larger than normal responsibilities. But sometimes conflicts of interest. So they're there, but they don't ask the right questions. They're not really bothered, and you wonder why. Is there something happening there? Lacks rules regarding authorization of transactions. And then reconciliations. When you don't have timely reconciliations, this is a big area. And I think a lot of the organizations have a handle on this, but in some organizations, you find just because of time, they're quite happy to let things just drag on. Okay, certain accounts haven't been reconciled, and especially if it's cash and bank, then you've got real issues. Behavior. So behavior patterns. I mean, have you got consistent behavior? We looked at this, so I'm not going to spend too much time, but lack of stability, inadequate income for lifestyle, resentment, emotional trauma, undue expectations, and uses excuses. So basically has tons of excuses to simply not do the right thing. Yeah, they make sure that the right thing doesn't happen, and they always have an excuse not for it. FCPA, red flags, bribery, high pressure culture. So yeah, you're really being pushed for results, or a gift culture. This is pretty common, I think, particularly in certain sectors. For example, infrastructure, construction. Business partner ties to government, particularly to officials. Activities require, and this is not necessarily a bad thing in itself, but it could be a red flag when it's unusual, and it shouldn't be there and it's unusual. So, not per se, these are not red flags, but only in unusual circumstances. Just remember that qualification. Activities requiring a high level of government interaction. Conflicted relationships. Unusual, sizable commissions or fees. Activities in a tax haven or high corruption risk country. Yeah, so all of these could be red flags that might go against the FCPA Act. A few more: substantial payments for services that weren't necessary. A bad reputation of agent or consultant. Reluctance to furnish information about business relationships. Reluctance to execute agreements containing FCPA compliance covenants. Meal or gift expenditures in excess of local custom amounts. Suggestion of a pay-to-play scheme. So you do this and you're in, otherwise you're out. Status of officials offering to obtain approvals on behalf of the company. So you've got somebody, who's pretty junior, for example, maybe in government, and he's doing some major things, and you ask the question, hang on, what's going on here? Or it could be not even government, it could be with suppliers or customers. Yeah, or people who are supplying raw materials. Tales from the dark side. So now we talk about some of the investigations that I have done, and and how it's gone, and some of the lessons learned. So this one involves a bank within a bank. Basically, the CEO was didn't have his eye on the ball. He was out there enjoying, having a really good time, but wasn't really keen on the detail. He left the detail to his to his staff. And what happened in this particular case is the bank employees colluded to run a parallel banking system within a bank, and they siphoned millions. They traded with clients' funds, and they stashed money into overseas accounts and properties. And this went on for years, over 5 years. Yeah, you probably find it hard to believe a bank in a bank, but yes. And until finally, I think one person who was in the loop just got disgruntled and blew the whistle. So we used data acquisition, forensic analysis through our forensic technology team, asset tracing, as well by fraud investigations and disputes. And finally, when we were able to see where the funds had gone, we worked with the legal teams and we obtained Mareba injunctions, and we started initiating some of the assets recovery. It was, once obviously we'd been alerted, it wasn't very difficult to find out how much had been embezzled. And in this particular case, the figure was over $2 million, and only part of the funds were recovered. This was another case where the individual was living beyond his means, and this was visible in a very clear way. So what this individual had done is he was basically responsible for market research, marketing. The entire department was under his wing in a beverage company, and the company paid millions for market research that was never conducted. So basically, this person set up a fictitious supplier, and he paid himself actually quarterly for cooked up market research. So people, who were paid, who were never hired, for example, university graduates, to do research. And this was actually used to drive the brand. And it went on for years until, again, somebody blew the whistle. Why did it go on for so long? First of all, there was over-reliance on this person. He'd been a senior member, earning close to 7 digits per month for a very long time. There was a lack of segregation of responsibilities. So it was quite easy for him to set up this firm. There were particular templates through which the research came. He knew those templates, and nobody questioned this. He did all of this on the back of his computer and then presented the results to management. Nobody questioned it. And there was no independent check of the supplier. And the employee was allowed to collect the checks that were made on behalf of the vendor and bank them. And again, the loss was over $1 million. Another very interesting one. This happened in the insurance industry. And this particular insurance company had just started a new division, life insurance. So they hired a senior manager who had recently left a competitor. This person was jobless. He was on the market looking for a job. So he didn't leave his last employer. He was on the job market. He was obviously, he completely knew his business, his industry. So he set up the systems, he set up the entire division, recruited his team, set up the processes, and he was given targets, and he was left to get on with it. And he did. The new line of business, after a couple of years, it wasn't as profitable as was expected. It was growing, so they had lots of the targets were being met in terms of the clients that they were taking on, in terms of the life policies that they were selling, but this was offset against rising claims and costs. So what we found was that there was serious fraud by the manager who was in charge of this division, this newly introduced division. What he had done, and this was amazing, he'd introduced new companies. So for example, a school, or a company that purportedly was manufacturing, fictitious names. And then he managed to obtain IDs of individuals. For those who are in insurance, you don't just issue a policy just like that. You've got to have ID checks. You've got to have a insurance check. The person has to go to a doctor, is going to be certified as being healthy, and so on and so forth. And this is a whole process. He was able to obtain all these documents for people that didn't exist and for companies that didn't exist. And then he bumped these non-existent people off. Yeah. And he was able to obtain death certificates for them, fake death certificates. And when the payments came, he'd organized his next of kin or some friends to receive those payments, and those went to his family and friends. And the fraud went on for a long time, and the insurance company lost over $1 million. So yeah, seems shocking, but there you go. Such brazen schemes because of basic checks, suppliers not being checked. We sent our team to where this school was that was supposed to exist, and there was no school, there was just grass. Same with the manufacturing company, there was no name. If anybody had done a simple name check, it would have come up as this company doesn't exist, but none of that was done. How to make pasta. So this is an interesting one. Yeah, we were asked to investigate why this wheat and pasta making plant was making losses, particularly when it ought to have been in a market where it had a near monopoly, but it was still making losses. And what we found was that the cost of production had risen to the extent that what should have been a profitable business was in fact making losses. And what we'd been told, what the company obviously was putting out, was that the equipment was very old. There was loads of breakdown. There was a request for brand new equipment. But in fact, upon investigation, what we found was that the alleged breakdown in machinery, plant, and equipment was in fact not true. The machines were serviceable, but in fact, it was all planned. The breakdowns were planned, and the breakdowns were designed to siphon unfinished pasta. And the individual there, the general manager, had set up his own pasta plant. And each time production stopped, there was all this unfinished, rejected pasta. And this was thrown away. It was actually sold as waste. And casually, his organization bought the pasta and processed it and sold it on. And again, there was losses of $2 million here. So yeah, you can see some of these are unbelievably simple, but you can see they happen and they go on for very long times. In this particular case, I remember we were doing the investigation and we were all suddenly called out into the yard, and there was the president of the country. And he'd come to, because he had a keen interest in this, and he had come to look at, what was going on. And he obviously had his guards, all of them had guns. And he walked up to me and he looked at me, greeted me, obviously. And he looked at me and said, right, you are the guys doing this investigation. Have you found something? And he looked there at management that was standing on the other side, because everybody was asked to come out and stand in the open courtyard. And he looked around and he pointed at those guys and he said, have those people stolen anything? And if they have, can you let me know? We need to deal with this. Yes. But at that time, as he was speaking, I was a little bit speechless because all of his guards were standing next to me with guns in their hands. So yeah, there you go. Right. Let's move on and let's look at some areas in which you can have a little bit of fun and also learn about fraud through Hollywood. Particularly during the pandemic, I remember my wife and I, we sat and we watched a lot more movies than we would have usually watched, being at home and so on and so forth. I know Netflix did extremely well in these last 2.5 years. Yeah, and Hollywood has a huge selection of movies that a lot of them are based on real life cases, and it's quite useful. When you come across one of these, particularly for myself, being in this sector, I'm always looking out for movies, which are related to my area of expertise. And when I find one, I watch it, and I watch it through the lenses, of a fraud investigator, where you can see the red flags, you can see the rash behavior from the individual. So much of it is there, plain and open, but again, they just get away with millions, and you wonder, wow, look, this is what happens in the real world, and it does. Right. So let's just go through it. The first one is All the Queen's Horses. And this is one of my favorites. This is a documentary, and it was the project of Professor Kelly Richmond Pope. She recounts the story of Rita Crundwell, who managed to embezzle more than $53 million from her small hometown while working as a clerk for over 20 years. So myself, as a forensic expert, I encourage my staff and my trainees in the forensic department to watch this movie, because there's so many lessons to learn from this. The first one is that people see what they want to see. The fraud can be staring you in the face, but you're not going to see it. You're only seeing what you want to see until it's right in front of them and they can no longer ignore the truth. First lesson. Second lesson, smaller organizations are often most at risk. We know this. And finally, we are all family type of atmosphere. It makes it even more difficult to distrust or question our co-workers. Catch Me If You Can, movie, 20 years old, but it's still one of my top rated movies for financial fraud. It's based on the true yet hard to believe story of Frank Abagnale. Even before Abagnale turned 19, he was worth millions of dollars. Eventually, he poses as a pilot of a major airline, a surgical doctor, a prosecuting attorney, and so many other professional roles. And he doesn't even have a high school degree. The movie demonstrates that age is meaningless. Yeah, he started stealing from his father. He stole his father's credit card when he was 16 years old. And it wasn't until much, much later that he was convicted of cashing in over $2.5 million in bad checks. And the movie basically illustrates how confidence is truly one of the keys to detecting fraud. This guy was so confident, he could just pose as anything and people would believe him. And if you remember the fraud pentagon, one of the factors we talked was confidence or arrogance. Well, yeah, so watch this movie if you want to see that in play. The Accountant. In this movie, the accountant is much more than just a number cruncher. He has Asperger's syndrome. For those of you who know what this is, it's on the autism spectrum. And what it does is it makes you detached from everything. You're very much an introvert. You can't empathize with everything. And you're very fixated on one thing. And in this particular film, this particular guy, the accountant, he uses his disability to quickly decipher books of account for his criminal bosses. And the movie has many twists and turns, and it keeps you on the edge of your seat. It's an action thriller with an accounting backdrop. And the key lessons here are, well, number one, there's more than meets the eye. Auditing is more than just a desk job. Two, do your due diligence when selecting clients and just be prepared for anything. And three, accounting can be fun and it can be exciting, lol. The Wolf on Wall Street. This film is based on the true life story of Jordan Belfort, a financial broker who became enormously wealthy by committing fraud and stock market manipulation. The movie portrays his extravagant lifestyle. He drinks, he's got drugs, he's into sex in a big way throughout his early 20s. and he gives the SEC and the FBI ample opportunity to investigate. The red flags are just flying everywhere. Interesting little known fact about Jordan Belfort. He went to federal prison for 22 months, where one of his colleagues, his cube mates, was Tommy Chong, the comedian, the actor, and the activist. It was Chong who convinced Belfort to write his life story, which eventually served as inspiration for this movie. Wizard of Lies. Like many films on this list, this one is also based on real life events. It's based on the life and the crimes of Bernie Madoff. We've all heard of him, the guy who founded his own company on Wall Street in the 1960s. And over many years, his company turned into one of the largest investment funds in the world. His arrest in 2008 revealed the truth behind his multi-billion-dollar Ponzi scheme, the largest in history. And I mean, the investigator in all of us should learn a few things about this particular bit of history. First of all, never give up on a hunch. There were a few people who knew something was not right with Madoff's numbers and kept at it. And also, you know, sometimes you don't get it. You have to swallow your pride. If it doesn't make sense to you, it doesn't mean it's not right. It may not make sense to others either. But yeah, you got to look at it, you know, and ask somebody else to explain it. If it doesn't make sense to you, seek help. Don't just be embarrassed. Madoff, in this particular case, he used complicated quantitative analysis and analytics to keep investigators from getting too close. Right. So that's my take on some of the movies. Getting back to fraud risk management. We covered two of the pillars in detail, a lot more detail now. We covered detection and we covered prevention. I want to use the first scenario that we had in webinar 1 to now look at investigation. In terms of time, we're running a little late. It's 4:15. I know we're scheduled to stop at about 4:30, but please bear with me. This is also going to be very exciting. For those of you who are new, for those of you who were in the first webinar, please be patient. I'm not going to continue with the same scenario. We're going to go into real life example on, you know, what happens. So please just bear with me. But I do want to bring everybody who wasn't there for the first webinar, you know, to the same level. So in the first webinar, I painted a scenario, and I painted a scenario where I said, you as the individual, you're in a building, and this building has a lot of rooms. There's a lot of people around you. Some of the rooms are completely dark and you can't see what's going on in them. And some of them are well lit. And now suddenly you're told, hey, you're a target. Somebody is out to get you. And not only are they going to get you, once they get you, they're going to get you out of the building. This is what you're told. Now, suddenly you realize things are not the same. Yeah, until then you were relaxed. But the moment you know somebody is out to get you, you know, it's not life as usual. You can't just go on feeling the way you were feeling. You know, you can't let your guard down, and you've got to try and survive. That's now your objective. You know, somebody's out to get you. And when they do, you're going to go out of the building. And once you're out of the building, you know, everybody that had any control over keeping you safe is not there for you. So, you know, you're completely on your own. Anything could happen. So what happened in that particular case? Well, what happened in that particular case was you started to look around. You looked around. You looked at all the employees who were around you. You started to look at faces. Do I know this guy? Don't I know this guy? And you realized you knew some of them. Other people were strangers. You started looking at the bulges, you know, in their coat pockets. You know, is anybody carrying a gun? I mean, how is this guy going to attack me? Has he got a gun? Has he got a knife? You know, and where is he going to attack me? Where is this attack going to come from? Is it going to be somebody, you know, who's lurking around in one of those dark rooms? Right? So we looked at all of this, and you decided this is really risky. Yeah. There were two choices you had. You could either do nothing or you could do something. And after looking at all of your options, you decided, well, we've got to do something. You know, there was a person who was really good at survival skills. He was there. Okay, this is now in real life. This is now obviously the anti-fraud expert or your internal audit department, people who are used to dealing with fraud, who are used to looking after, who are used to uncovering fraud. And you went to him and you said, right, guys, can you help me? Can we try and get this guy before he comes and gets me? You realized it wasn't an option just to stand in one place, you know, and just let somebody creep up on you because if you were attacked, you don't know, it could be life-threatening, you know, you may not survive the attack. So why did I paint this scenario? And the reason I painted this scenario was there are striking similarities. Yeah. In one case here, your life is in danger. And on the other case here, you've got an organization, you're running the organization, and you've just been told you're losing 5%. So it's the same thing. And the similarity is striking. If you look at these 10 slides, you can see, you know, red flags, you can see fraud prevention plan, risk assessment, you can see everything, it's all there. So everything that we do, you would do if it was your life at stake. But when it comes to your business, some of us take a different approach. Why is this? Is it simply because, you know, you haven't seen the fraudster, you haven't seen the fraud, you haven't felt the impact, you know, of the attack? Well, if that's the case, this example should now alert you, and you really, you know, you need to go on the offensive. You need to start dealing with this problem as though somebody is out to get you. Remember, you are the asset in the organization, and somebody is going to take that asset out, whether it's cash, whether it's stock. Once it's left your organization, chances of you getting it back, nah, you're not going to get that money back. So now we're all together. This is where we were. I painted the scenario. Let's move on. So we've decided that the threat is real, and we need to deal with this threat quickly and decisively. So now what do? Right. I'm now going to take us to a real life situation. In your company, you get an allegation of suspected fraud. What do? Do you confront the suspect? Do you call the external auditor? Do you call external lawyers? HR will say, hey, you know, there's it's only a suspicion. Let's go and ask this guy. But no, you shouldn't ask this guy, because if it's real fraud, guess what's going to happen to all the evidence? And guess what's going to happen to all the people, you know, who are working with him? So you can't confront the suspect. Are you going to call the external auditor? No, you shouldn't call the external auditor. Why? It could be that this is a planned fraud, but what if it's negligence by the auditor? Is the external auditor going to tell you, hey, you know, here's the evidence, okay, and yeah, you know, you can now use this evidence, and you know, I really was negligent, I should have picked it up. Obviously, it's not their responsibility. So you shouldn't call your external auditor. In many cases, they're going to be conflicted, especially in the largest companies where you've got multiple auditors. You know, if you're using, for example, the Big Four, chances are you've used all four. Okay, so chances are that if it's gone on for 5, 6 years, 10 years, chances are almost all of them are going to get conflicted. This is a good opportunity. Pick up the phone, call BDO. We're number 5 in the world. Chances are we're not your auditors. We haven't been rotated. So yeah, call us. We do have a forensic team. You know, we can come in and we can look at this objectively. Obviously, you're not going to call us if we're your auditors, and we don't want you to call us. Go and call somebody that's completely independent. Are you going to call external lawyers? No, you can't call external lawyers because it's premature. Lawyers can't do anything without evidence. Lawyers need evidence to act. So you need to call the person who's going to get evidence for you. Many organizations try and do this themselves. Well, fine, you can, if you have the capability. But the chances are, if you get it wrong, the suspect is alerted, or you mess up collecting the evidence, by the time you've encountered, you've found out the size of the problem, a lot of the evidence could have been destroyed. You yourself might have tampered with the evidence and you may not be able to use it. So there's a big risk of trying to do it cheap. I'm not saying that when you do it internally, you don't have the resources, don't try and do it cheap. try and get the experts in. So what are the golden rules when you receive news about an allegation of suspected fraud? Well, the first thing you should do is treat the allegation in absolute confidence. Tell only those who absolutely need to know. Keep the suspect in place and unaware that they are under suspicion. There may be other circumstances, for example, where it may be a threat to life. Obviously, you don't want to keep the suspect. If life and limb are under threat, you also don't want to keep the suspect if by keeping them there, the losses are just going to just go out of control. So yeah, it's you got to look at your own circumstances and then decide: do we keep the suspect in place, or should we let them go? But in normal circumstances, keep the suspect in place and unaware that they're under suspicion or under investigation. Next, consider calling an external corporate fraud investigation company. And I talked about this. Internally, appoint a project manager just for this. So somebody who's going to manage the whole thing. And the sensitivity is because the external investigator is going to come in under pretext that they're doing something else, and they're going to do it very quietly without raising any suspicion, that an investigation is going on. That's what you want. So it's going to be somebody who's totally trusted. This internal project manager, you must be able to trust him, because if he happens to be part of the gang, then you've lost the battle even before it started. Ask for a detailed proposal setting key steps and costs of each from the investigator. Agree the budget for the investigation. If you've got fidelity insurance, look at that and report the matter to your insurance straight away. Look at the notice period. It's better to report early rather than too late, because some of these notice periods are 30 days, 60 days. You don't want your insurance company to say, hey, too late, we're not going to cover you, or they limit your cover. And then you start the covert investigation. So what do? First of all, you make discreet inquiries. The investigator is going to conduct desk-based research on each named suspect. What are we trying to uncover? We're trying to uncover conflicts. We're trying to uncover covert shareholding, or a preferred supplier, or lifestyle beyond visible means, or anything else from desk-based research. Get the investigator to make an image of the suspect disk for offsite analysis. So they make an image, they go out, they do whatever they want with it, and then they come back to you once they've got. Also, they can start discreetly monitoring office-based communications to see if the potential area of suspicion appears in those. So by using specific or phrases or patterns, they can now start going through office-based communications just to look for that. Next, when you're looking at discrete inquiries, you need to look at the legality of discrete monitoring. In many cases, your employment contract will allow for this, and your company policies. If they don't, then go and look at your employment contracts and your company policies and amend those so that when there's suspicion, you are allowed to discreetly monitor, you are allowed to have a covert investigation, you are allowed to look at documents, and so on and so forth. So put this into your policies. Selective data mining, identify clues beyond what has been alleged. Now, we all know that fraud is like an iceberg. Yeah. What do you see when you look at an iceberg? You just see the tip of the iceberg, right? The rest of the fraud is under the water. You can't see it. And that's what's going to happen. When you start data mining, you're probably going to find the fraud is much larger than what you thought. You're probably going to find it's in a lot more areas than you thought. you're probably going to find a lot more people are involved than just the one person that you had suspicion over. And that's why you've got to keep all this under the wraps. So identify the extent of the fraud and also all the undiscovered fraud. And you may want to use surveillance to identify extracurricular off-site meetings. Yes, I mean, if you need to follow people, follow them. If you need to go to places where you think meetings are going to happen, go there and get this extra evidence covertly. You've got to make sure everything you're doing is strictly legal. So your investigating company must be familiar with local laws. When you don't know, get written legal advice. If there's any area of the investigation that you're not comfortable with, speak to your lawyers and get legal advice. How do I handle this particular sensitive area? So you're going to get a detailed interim report and evidence once they've done their desk reviews, done a bit of surveillance, looked at communication for keywords, and so on and so forth. You're going to get an interim report plus evidence. And this is the first phase of your covert investigation. So then you're going to have recommendations as to next steps. Some of those recommendations will be legal orders to complement the full-blown investigation. At that point, for example, you might have already discovered, yes, money's gone missing. So what you want to do is you want to get a freezing order at that point, or you want to get a search and seizure order, which is also called a civil search warrant. Obviously, the police are going to do this, but you can go and get them to do this for you because you've got enough evidence that your assets have already moved and you don't want them to move any further. The report may also recommend simultaneous, unannounced interviews with all suspects and potential witnesses. So that might be another finding. You find it's not just one person, there's a lot of other people who may be involved, and they might be potential witnesses. So what you want to do is you want to organize, this is where the evidence is, because their stories may not match. So you don't want to lose this opportunity of them speaking with one another. You want to make sure that you interview all these guys simultaneously, unannounced. And at this point, because now you're getting into the full-blown investigation, you want to retain a law firm with experienced fraud litigation lawyers. Ask them the question, have you investigated fraud? Who have you worked with? And have you then defended a matter in court? Ask them this question. At this point, you may want to do a bit of contingency planning for business continuity. For example, if you've realized that key personnel may be involved, then you may want to take some steps to safeguard those operations, also to just ensure that you've got business continuity in those areas. Reputation management. So it may not be possible to keep this matter internal, because if it's very big, if your fraud size is huge, it involves maybe external parties, suppliers, customers, so you've had to talk to them. It's highly possible that there's going to be a leak to the press or generally out to the public. So don't rule that out. Don't rule out that there may be a leak, particularly if it's a large fraud. Get ready and have a press statement just in case. And I mean, reports, even in the press, are not a negative thing. There's a positive side to this, because this is an opportunity for you to make a clear statement out to the public and to employees. You want to tell them at this particular point, you've got zero tolerance for fraud, that you're going to take swift action, you're not going to beat around the bush, and that you're not a soft target. So yeah, you could look at this positively as well. So what do you do next? You want to get first-hand accounts from everyone. You want to carefully plan simultaneous, unannounced interviews in advance. The team leader will prepare the interview plan for each interview team. So let's say you've got 3 people you want to interview simultaneously. You're now going to have a group of 6 people, because you always interview in pairs. So each interview team is going to go into a separate room with this individual exactly at the same time. And each one is going to have an interview plan. That interview plan is going to be specific to each subject. And there's going to be a debrief on the interview plan with objectives for each interview. So the interviewers know exactly what to ask. They know where they're going. Remember, the interview is like, when you go to safari and you want to narrow down, okay, the area where the animal escapes. So the interviews are like that. Okay, you've got to plan it so, there's no escape route. You can't go to an interview without a detailed plan. You've got evidence and now you've got plan, and you really want to put this guy into a corner exactly where you want him, so he makes a confession. During the interviews, you're going to have a control point. And at that control point, this is for sharing evidence, because remember, your different teams may get conflicting stories, because now the fraudster is going to lie. As you corner him or her, he's going to start making up stories. Yeah, but you're going to catch them out, because it's very unlikely that the three individuals are going to come up with the same story once you've got them into a corner. And that's why you've got this control point for sharing information and evidence during interviews. And you also will have a debrief by the interview teams at the control point. So you may want to have a quick debrief. You stop the interview once you've collected enough information. You leave the guys in the interview room. Don't let them leave. So you've got a guard at the outside. Okay, they can't leave. You go back to the control point. You have a quick debrief on these key areas that you think are stories, and you check with one another. You quickly come up with your follow-up questions, and you go back in and you complete your interview. Disciplinary process. So once you've done the interview and you've written up the report and you've discussed the findings, there's a good chance that the investigation is going to be out in the open. There's a very good chance that the people who were interviewed, if they're guilty, they're going to go and try and get sympathy from, because they know they're going to lose their jobs. There's a very good chance they're going to try and get sympathy with some of their best friends to give their version of story or whatever. Right. So basically, you will need to then start the disciplinary process that you already have in your firm. If you don't have one, now is a good time to actually go and get some policies for disciplinary measures in case of a fraud, in case of an investigation. You also need a strategy to handle external parties in the way they were involved in the fraud. And I think the key lesson here is don't ever ignore a fraud allegation or sweep it under the carpet. When something happens and comes to light, do treat it with the seriousness it deserves, so that you can make the most out of that opportunity, because you may not get another opportunity. Right, word of advice to HR managers, my very good and very dear friends. Sometimes cautious HR managers may cry foul. They might say, hey, the covert investigation is unfair. Why are you doing this? Let's just go and talk to the suspect. They might be very close friends, and let's just ask them, all of this is just nonsense. It really can't be true. And the answer is always going to be no, you can't do this. Why can't you do this? Because firstly, if they're guilty, what happens? All of the parties who are involved will immediately be alerted, and all of the evidence will be destroyed. And there goes your investigation. And there goes maybe your chance, to stop fraud from happening in the future, and to stop your fraudsters, and to try and recover any money. So basically, you're just stuck living with evil. The second thing is, what if it's not true? So let's look at the other side. So if the guys are innocent and you didn't do this, you didn't have a covert investigation, then there's always going to be a cloud of suspicion, because their names have come up, you've just left the matter, you haven't investigated it, and obviously, it's just going to cloud the whole relationship. You're never going to be comfortable with these people. You won't be able to delegate authority to them as they want, and it's just not going to be life as usual. So under all circumstances, you need to investigate. These are the three lines of defense that we've looked at, right? We're coming to a close now. First line of defense is operational management. They have the responsibility to investigate fraud, to prevent fraud, to mitigate all risks. Your second line of defense is risk management, compliance, and they're the ones who monitor and they inform. And your third line of defense is your internal audit, your external audit, the surprise check that you're doing, your systems and so on and so forth. And they provide assurance to the board that senior management is working. But my question is, what happens when all these three lines are overridden by the guys at the top? So what happens when your board or your CEO or bunch of executives all make up their mind to commit fraud? And I think I'm going to try and bring this to a conclusion. There's a saying by Juvenal. He was a Roman poet, and in one of his satires, he said, "Quise custodiet ipsos custodisse," which means, who is going to watch the watchman? Right, guys? I hope you've found this session to be of benefit. Before I let you go, I want to whet your appetite. You can see a picture here, and you can see on top agenda for part 4. Let me tell you what's happened. In the first 3 webinars, okay, we were taxing. So we're the plane, and we got a really long runaway because, you know, this whole subject matter of fraud, corruption is a huge matter. We couldn't have taken off earlier than this. So for 3 webinars, we've learned a lot, and I know, you know, it's really been enjoyable and so on and so forth, but now we're ready for takeoff. So what are we going to cover? This is where the rubber meets the road, guys. So I'm going to go through the key lessons from parts 1 to part 3. Next, we're going to look at the global standards for forensic accounting and how those are evolving. We're going to look at common fraud types and how to detect and prevent them. And specifically, I'm going to focus on vendor fraud, accounting fraud, payroll fraud, and data theft. And within these 4 frauds, we're going to look at more than 40 different fraud types, how we can detect them and how we can prevent them. So the next one is going to be action-packed. We're also going to look at preventing and detecting bribery and corruption. We're going to look at evidence. What are the types of evidence? Direct evidence, indirect evidence, hearsay, circumstantial evidence, and what are the rules around evidence? For those of you who want to go to court, who want to engage lawyers, you need to know the basics. We will also do fraud risk assessment in these 2 particular areas. So I will have a template, which I'm going to use, where we will go through a lot of questions, and you will leave with almost a checklist on how you can do this in your own organizations. We'll also look at code of conduct, and then we'll have a final wrap up, and hopefully we'll have some time for questions and answers. I leave you with this last slide. We're not going to sell this, but this is what we do at BDO. We can offer a full complement of services. If you have any issues, please pick up the phone. You've got my email address at the very front on my profile. You've also got my phone number. So please feel free to call us at any time. I thank you for your time. I thank you for your patience. We're 15 minutes over. So my apologies for running over time. And I hope you've enjoyed this session. And I really hope that you can join us for the next one. Over to you, Moses.
Right, Zahir, thanks for sharing all this knowledge with us. It's not every day that we have an expert sharing all this knowledge at no cost on our end. So we really appreciate that. And I like that each of our audience sections had something to go home with. The movie lovers had some movies in there for them. The statistics lovers got those. Those that love the stories also got those. I saw Dixon was asking how you managed the gun situation, the time you were responding about the fraud thing and people had guns. So maybe sometime you'll explain that to him. But also those who are still in the early stages of their career also had bits of career guidance when you shared your experience on how you transitioned to fraud. So I think this has been very helpful, but also as we saw from the polls, we still have a long way to go in terms of fighting fraud, the anti-fraud measures that we think are necessary. So I know that you and the team will come up with a few more series that can address these gaps that we've seen along the way. But otherwise, our time has been fast spent. So I'll ask
Moses, you want to mention about those who've attended this for the next webinar, please?
Yes. I must emphasize that all those attending this webinar, all those who registered and have attended, are entitled to attend part 4. So you don't have to re-register. You'll simply get the links that tell you when to join. So Zahir, in the interest of time, after all that you've said, what's that swim or sink idea we should go with from all this conversation today?
Basically, I think everybody should be on board now that, this beast that we're dealing with, fraud and corruption that we're dealing with, is real. It is affecting every one of our organizations. There's no denying that. And, we've got to, wear this hat. We've got to wear the hat, where we're inquisitive, we're thinking seriously, and we look at every opportunity to pick up red flags. And in the attempt that, we will actually get to uncover some of these frauds. I think the reality is because our economies are small, and I'm talking about sub-Saharan Africa, a lot of our businesses are family-owned businesses. And those that aren't still operate very much we're all very friendly people, sub-Saharan Africa, very friendly people. In East Africa, we're very friendly people. We welcome, all our employees. We make them feel like, they're part of family. We give them amazing trust. But I think the reality is that there's a small percentage of people who will unfortunately abuse that trust, who will use their knowledge of organization weaknesses to take advantage of the organization, to steal from you. And we need to be aware of this. And, obviously, once our guard is up, we must do the minimum. What we're telling you here in terms of fraud prevention, that's the minimum. You have to do the minimum. If you scored 100, when you get your results, if you scored 100, if you tick the down boxes, then maybe, you can rest easy. But if you weren't ticking the down boxes in that survey, then really you've got some work to do before you can sort of go to sleep at night thinking, yeah, my business is safe. I'm not really losing money that I don't want to lose. So I think that's the message, Moses.
Right, Zahir, thanks. So to all of the over 600 participants that have joined us today, would like to appreciate you. Please stay on the look for part 4. You can't miss the last episode. And we would like to thank all of those who have been with us on this journey, right from the first episode to where we are today. For those who have been asking for the recording, we will surely share the recording. And those that missed part 1 and part 2 but would like to have the recordings, just send us an email to, I'll just paste that email here, communications, video@communications. I have put it in the chat section. Just send us an email and we'll share with you the recording for part 1 and part 2. Otherwise, we appreciate you taking time to join us today, and we wish you the very best in the rest of the evening. Thank you.
Thank you.